Good afternoon to everybody watching our channel. After our last, I would say, happening, an event where we have publicly went through the basic course #1 video, and we explained what are the three main subjects we need to go through when we're actually exploring investing in the crypto sphere, in the crypto industry. Now we're going to a second, I would say, course. This is the second video of the course, where according to our viewers, the ones that were present in the last public event that we have managed together with Crypto Hub Malta, we have determined that the most important thing we should focus on is the technical and fundamental analysis of a crypto project. Obviously, we're going to take Ethereum as the second largest crypto project in the crypto industry as an example how we do a full analysis of a technical and fundamental, I would say, side of this project, so we understand what we are investing in. Now, on our Macedonian channel, we have already devised a full strategy of 6 groups of questions that we need to answer to have a full, I would say, understanding of what we are investing in. Now, we're going to start with the basics. As you can see, first we're going to answer the question of the application and practical use case of this coin. What is it used for? Now we're going to understand if there are any other projects that are competing with it, as well as is there any real world application that can replace it, which is actually one of the biggest problems that might happen. Regarding roadmap, we are going to see if how it's developing. Is it a long time on the market? Is it still active? Are the developers still pursuing practically updates of the blockchain itself? We're going to check the roadmap of the project itself. Then we go through the technical analysis. We're going to see in which part of the cycle the current coin is. Is it in a bear or bull cycle? Obviously, most of them depend on the Bitcoin cycle, but still we're going to check as usual. Then we're going to go through the fundamental analysis, news about the project in the last period, partnerships, exchanges where it is available, how has its own ETF and ETPs. These are exchange traded funds and products. Practically, if it's held by institutions, if by any chance it has its own spot and future ETFs, as well as if it has its own debts. There's the DAT, Digital Assets Treasury companies that are actually accumulating this type of coin. If it's connected to any criminal or civil court cases, tokenomics, type of blockchain, practically what kind of blockchain we're investing in, supply, limited or not, how much of the supply is already on the market, how much of the supply is owned by the team, institutions, real world asset token representation. Practically, this is how much of the real world assets are tokenized on this blockchain. Active developers, how active are the developers as well. Statistics of use of the blockchain, which we will go into details, and the last group is decentralization, checking the largest wallets. Now we're going to go not by, as you can see, this I would say one by one. We're going to go depending on where the subject takes us, because there are a lot of different topics we need to cover, and depending on the project, usually we are not answering them as you can see in this order. But in any case, below my picture in the practical video, you can see a square where you can see which part of the I would say questions we are answering at the moment. Additionally, first thing that you need to know about our channel, that we prefer to practically separate the coins and tokens in the crypto industry into 20 different topics. As you can see, these are type of technology that the projects represent. Now, as you can see, we're going to go one by one. So far, we have already done one video for one particular, I would say, niche or category. There's the interoperability. We're going to do 20 separate videos with 20 categories to explain all and each of these categories, what they are, what they represent, and what are the best projects in them, practically to understand what type of technology are actually included in these type of categories. So this is something that we're going to have on the channel as well. Just for you to know, now we are actually talking about smart contracts, which is the category in which Ethereum is a part of. We're going to explain in detail what actually layer 1s are, at least just as an idea, so you can understand why Ethereum is so important. In the meantime, one thing you need to understand is that, as well as by the categories, as you can see over here, we also divide the coins and tokens on two different, I would say, no, on several different sizes, depending on their market cap. Market cap is how much money is invested in this particular project. Everything that has less than $1 billion invested, we consider as a micro project in the crypto industry. From 1 to 5 billion, we consider it a small. From 5 to 10 billion, medium, and above 10 billion, we consider it a large crypto project. In this case, as you can see, Ethereum is the second largest, right next to Bitcoin, and obviously comes into the category of large projects. As we have mentioned, in the same time, it's a layer 1 as well as smart contract compatible platform. We are going to discuss in detail what those are in just a minute. What we also need to understand is that this project is, I would say, for some time now. As you can see, the ICO is from 2014. Rarely there are projects that are older than Ethereum. I would say maybe several, like XRP, for example. But in general, ICO is initial coin offering, which was actually concluded in 2014 as a startup company in Switzerland. As you can see, this is the first actually, I would say, action taken as a project, where $18.6 million were raised for this particular project to be developed. As we can see that there is another practically round of investments done on the 7th of August 2015, where, as you can see, it was practically listed. And in this case, I can see that people actually were buying it on a very, very small price, I would say. Price on listing, $2.8. As you can see now, the price is above 2,000. So you know what I would say, what a big, profit people made that bought the coin in 2015. But let's put it aside. The important part that we need to understand, first of all, as an application. So as we've said, the main actually use case of Ethereum is to be a layer 1 smart contract compatible platform. As we can see on this list, it's the largest layer 1 right after Bitcoin, as well as the largest smart coin platform right after Bitcoin. Now, we will mention in the next videos why we don't consider Bitcoin a layer 1 and a smart contract compatible platform. But for now, let's go with the flow. And let's say that Ethereum is number 2 in size when it comes to the layer 1 and smart contract compatibility. Now, as we mentioned, every blockchain has its own consensus mechanism. Don't forget that the difference between the name of token and coin, when somebody says Ethereum is a coin, or for example, Optimism a token, then it means that Ethereum has its own layer 1 blockchain, which makes it a coin, and everything that does not has its own blockchain makes it a token. Now, as we've seen, this is the program that is used by the blockchain system to achieve distributed agreement about the ledger state. This is the mechanism that is used to agree of all the nodes inside the blockchain to actually make a block with certain information in it. Now, we are practically expecting that you already have the basic knowledge of what a blockchain is, so we're not going to go that back far. But later on, we're going to make separate videos for this topic as well. What we have to mention before we start talking about the consensus mechanism and the type of blockchain that Ethereum uses, we need to explain that it's not always the same type of blockchain. Why? Until 2022, the merge, this is one of the updates that was implemented on Ethereum. It was proof of work type of blockchain, the similar type of blockchain to what Bitcoin is using. From 2022, it practically started being a proof of stake blockchain with a update called the merge. So it's changed the way it makes practically consensus on its blocks. Now, although this is part of the application to explain what is a layer 1, this is a part of tokenomics. As you can see, we have changed the subject below my profile picture. Why is this important? Because we need to explain that what type of blockchain it is and how it functions. And then we're going to explain why this type of blockchain is very important for the layer 1 and proof of stake interoperability, proof of stake compatibility, which is practically the use case of Ethereum. Now, as you can see, This is how a blockchain actually works when we're talking about the proof of stake type of blockchain. First of all, we have nodes, which are these, I would say, safes where people are keeping their Ethereum coins. And these are called the validators, but these are the delegated validators. Why? Because not all coins inside this delegated node is their own, which means that you, as a holder of Ethereum, can put your coins in one of these delegated nodes or validators, and you can practically stake for a certain reward. Now, all these coins together, grouped in one node, gives this node practically a right to be part of the network of nodes and write and confirm different types of blocks. Because this is, as you can see, included in the name of the blockchain itself, which is proof of stake, which means that you need to have stake inside of this blockchain to be allowed to practically write or approve and validate different blocks. The second step is, as you can see, that this vast network of nodes randomly by a special algorithm decides which validator will be the next to write the block. Why is this very important? Because the algorithm that writes the block practically gets the reward for the written block from the blockchain itself. Now, when the algorithm starts writing the block needs to be approved by all the other validators on the blockchain. And when that happens, we have practically consensus, and all the other nodes have the same node, the same block written in their, in this case, blockchain, in their ledger of blocks. Now, the idea is that every new block needs to be done in the same way. Every other block needs to be practically, first of all, written by one of the chosen validators in this vast network of validators, and every block needs to be approved by all the validators. That way, all the validators have the same copy of the same ledger where all the blocks and informations are written. That way, we have this practically line of blocks that is actually the blockchain itself. And when this last block is approved, the validator that have actually written this block is receiving the rewards for the block itself. Now, this is how a basic blockchain works. The difference in this case to a layer one is that not only it's a basic blockchain, in this case, proof of stake type of blockchain, it additionally is a layer one, which means that it's smart contract compatible and it can develop its own decentralized applications, which means apart from the basic blockchain, which is proof of stake, Ethereum is also a smart contract compatible platform, which means that on top of it, you can have different types of, I would say, crypto mechanisms, like, for example, the layer twos, which do not have their own blockchain. They are using the safety of the blockchain on which they are built, but they are a lot faster and they have a lot cheaper fees. So this is why, for example, the layer twos are actually existing and they're part of the Ethereum ecosystem, as well as later on, you can have a layer three full of decentralized applications, which can contain decentralized finance, gaming, social, etc., which practically contains a full ecosystem of one blockchain. But again, the layer one, the basic blockchain, which contains the basic, I would say, line of blocks, and in this case provides the security with the vast network of validators, is the layer one, and in this case smart contract compatible platform. So if we go back to application and the first question, this in particular blockchain is a layer one proof of stake blockchain which is smart contract compatible. And again, are there any other projects which are competition to this type of project? Yes, a lot of them. As you can see, layer one category is one of the largest categories in the crypto blockchain sphere. As you can see, all these projects are actually similar to Ethereum with their own, obviously, characteristics, which we're going to develop and which we're going to talk about one by one when the time comes, as well as smart contract compatible. All these blockchains that are actually programmable are also competition to Ethereum. Now, so far, Ethereum has the largest ecosystem, which we're going to talk a bit later about. So it means that so far it's winning the race, at least in this department. But again, I don't think there will be one winner. I think there will be interoperability of a lot of different projects that will be the future of crypto. And are there any real-world applications that can replace it? No, because everything that is developed on Ethereum cannot be developed outside of the blockchain world. So far, the traditional softwares cannot process and practically develop anything on the blockchain technology. So in this case, obviously, there is a lot of projects that are his competition in the crypto industry, but none outside of the crypto industry. Now that we have explained what is the ecosystem, I would say in a basic form of one layer one, I would want to also mention that on the Ethereum blockchain, now we're going back to the tokenomics for a bit, we have a layer twos, which are actually additional side chains which are built on the network of Ethereum, which are using the safety and the basic blockchain of Ethereum. But as we can see, they are helping with the transactions. So as we know that Ethereum is one of the slowest blockchains in the crypto industry, because it's, I would say, one of the oldest and in the same time, but it is one of the safest, definitely. It processes around 20 transactions per second, as you can see on this graph on the right. Additionally, we can see that the other ones are able to process a lot faster. For example, the rollups are able to process 1,140 transactions per second, which means they are the ones providing the speed on Ethereum if somebody wants to build. That's why we can see that most of the applications are built on the layer twos, not directly on Ethereum, which means this is one of the, I would say, upgrades that Ethereum has in this case as a layer one. Now, the next important thing we need to mention about Ethereum is that it has its own programmable language. As you know, the standard softwares, they are using program language like the C++, for example, or Python, for example. But in this case, blockchains usually have their own programming languages. In this case, the language that is used by Ethereum is called Solidity. And is invented and developed by the Polkadot inventor, believe it or not, which was part of the original Ethereum project, Gavin Wood. Now, as we've seen, Solidity is mostly used in this case by the applications that are and layer twos that are part of the Ethereum to practically be compatible with Ethereum itself. If we go forward, now we're going to go for a second to the roadmap. In this case of the blockchain. Now, Ethereum has an extensive roadmap so far. We are currently at the Fusaka, I would say, upgrade. Next, in the first half of 2026, we're expecting the next upgrade, which is the Glamsterdam. The idea of the upgrades are actually to make the blockchain better. How they are doing it? They are doing it by a special thing called the AIPs, or the Ethereum Improvement Proposals, which are, in this case, proposals that are tweaking the blockchain itself to make it better in certain areas. Ethereum has a vast roadmap of what is expected to be in the future. And as we can see in this case, unlike most of the blockchains that are using a special organization called a DAO, which is a decentralized autonomous organization, which is actually consisted of all the nodes and the stakers, which have their own right to vote and give, I would say, a way in which this project should progress. In this particular situation, although Ethereum is one of the most decentralized blockchains in the world, it still does all the upgrades by following the Ethereum Foundation. The Ethereum Foundation is the main, I would say, organ that is deciding on which AIPs will be included and when they will be integrated and how. So if we go back to the roadmap itself, so far the last few, like Fusaka and Pectra, and Denkun, from which it became a sharding protocol, but for this in a future video, when we're going to work these separate upgrades one by one in the future as they come. As you can see, Ethereum is focused on improving as much as possible the layer twos, which, as we can see, are a lot faster and a lot cheaper in transaction fees. So for this reason, Ethereum has decided to lean on the layer twos for its improvement in the future, because it has a vast ecosystem and it needs faster and cheaper transactions, which Ethereum itself cannot achieve, obviously, since it's a bit older. Is the, I would say, second generation right after Ethereum of blockchains, which were novel at the time, but now, as we can see, are a bit behind. So obviously Ethereum is trying to find a way how to improve itself by using the layer tools as a special tool to do so. Now, this is about the roadmap itself. As you can see, we have an extensive roadmap. There are actually, as you can see, two major updates every year as per the Ethereum Foundation, which means that this project is very active, and obviously in this case it has I would say a very bright future, if you ask me, depending on what we have discovered so far. Now, as we've mentioned, proof of stake, as we've seen in the transaction, how it's actually processed and how it's made into a block. Who is doing this? We said is done by the validator nodes. Now, the validator nodes are something that everybody can have. As we've mentioned, for you to have a validator node, you need to have a certain amount of Ethereum. In this case, the amount of Ethereum you need to have is 32 ETH. So you need to have a minimal amount of 32 ETH to be able to have your own Ethereum node. Now, just for you to see how much that would cost, for example, that is right now $73,472 for you to be able to have your own node. But again, this is just the Ethereum you need to have. Additionally, these are all the requirements and programming that you need to do to be able to have your own node. Obviously, you're going to find over here the hardware and software requirements of what type of computer and operational system you need to have, but we're not going to go into detail. The link of these instructions, which is coming straight from the Ethereum organization, will be in the description of the video. You can take a look at it and you can decide potentially if you want to have your own Ethereum node, which again is the one that receives the rewards for every written block if you are chosen to do so. Now, if we go forward, I would just want to demonstrate by this special page that we're using called the token terminal, how many validators currently we have. As we can see, that's why I'm saying this is one of the most decentralized blockchains in the crypto sphere, with 895,000 Ethereum nodes, which are actually processing transactions on the Ethereum blockchain. Obviously, this is also, as we can see, confirmed by the Ethereum organization itself, 898,000, so plus minus. Now, what we can also see is the staking. As we've mentioned, anybody can stake its own Ethereum. You don't need to have your own node. You don't need to have 32 Ethereum to be able to stake. You can stake any amount of Ethereum you have. And the reward currently on a yearly basis is 2.8%, which means if you lock your Ethereum into these delegated validators, you will be able to receive a yearly reward of 2.8% on a yearly basis. Now, the details of the staking itself, again, will be in the description together with the link to the creation of a node just for you to see how you can actually stake your Ethereum. Everything is explained here, and also where you can do so. This is practically the part that we can so far explain from the basics of the blockchain itself. Only thing we also need to explain that anybody that wants to also build any kind of decentralized application can do so by following the informations on, again, ethereum.org/developer/tools. You can find all the tools you potentially will need to be able to create any type of decentralized application or a sidechain on this kind of blockchain. Additionally, for you to understand how big is the ecosystem of Ethereum, now this is on CoinMarketCap, just I would say a rough representation of all the large projects that are currently developed on Ethereum. Obviously, some of them are decentralized applications, some of them are DEXs, some of them are layer 2, sidechains, etc., etc. And how large is the capital that is running through this application, we're going to see a little bit later on in the presentation today. Now, the next thing we're going to go through is the fundamental analysis. We're going to go through the basic, I would say, newest news about this project. First of all, as we can see, BNY Mellon, this is like the latest news we can find about this type of this particular project. The latest one is that BNY Mellon, that's the Bank of New York, is developing investment products on Ethereum and Bitcoin. In this case, it's developing its own ETF, which means there will be additional exchange traded fund which will be run by the BNY Mellon for its own clients, which is very good. This is, again, proof of institutional adoption of the blockchain industry. Bitmain is one of the largest investors in Ethereum. We're going to show that when we're talking about the DATs, in this case, the digital asset treasuries of Bitmain, which is the largest Ethereum buyer. The same Michael Saylor and MicroStrategy is the largest buyer for Bitcoin. Now they are actually saying that soon they will start slowing down with the Ethereum purchase. Now I'm going to show you how many they bought. You'll understand why they're doing and saying so. But again, I don't think that's a big problem. And also a very large, I would say, news and very important milestone that currently on Ethereum, the tokenized US Treasuries has just passed $8 billion. Now, this is part of the real world asset tokenization, which again, according to me, at least this is my opinion, will be the main driver of the crypto industry, the crypto, I would say, projects in the future. Again, one thing you need to understand, even without us talking at all about the real world asset tokenization, is that nothing from the real world assets can be tokenized on Bitcoin, which means all this permabull talk about Bitcoin is the only important crypto projects in the world falls on deaf ears. Why? Because at the end of the day, everything that is currently tokenized, and everything will be tokenized soon, has to be tokenized mostly on the layer ones, of which Ethereum is the largest, as we've mentioned. This is why Ethereum is one of the most important projects in our portfolio. Now, we're going to go next to a technical analysis where we're going to explain where this project is in the bull and bear cycle. But don't forget, usually we always follow the main cycle of Bitcoin, and we just use that one as a, I would say, main indicator of when we should expect any kind of rise and fall of the altcoin season and altcoins in general. In this case, since we are at the practically, I would say, middle of a bear market of Bitcoin, I don't see any very high prospects of, I would say, a bull market for Ethereum, obviously, until we have seen a bull market on Bitcoin as usual. But what we can see is that the first major, I would say, bottom we have achieved for this cycle, as illustrated by this large accumulation triangle. Now, all these informations regarding the technical analysis in details about the formations, the levels, the indicators we are using will be used and explained in separate videos when the time comes for us to actually develop the technical analysis on our channel. Trust me, we are very far ahead on the Macedonian one, but we're going to get there step by step. What is very important is that the 50-month middle range of the price of Ethereum is the main support we've seen so far since practically the last correction we had on the April 2025. Obviously, this is the bottom of the triangle, which is also a correction and I would say support for the full cycle of Ethereum from the bear market of 2022 up to the, I would say, unsuccessful bull market of 2025, where we just retested the previous all-time high. So as you can see, again, I am still quite certain that this is a very large accumulation which will play out in the next bull market. We are expecting probably the beginning of next year, 2028. Now, very important is that all the middle ranges of the market cipher A as well as the bull market support band are above us, together with the 50. This is the 100. This is the 50 moving average of Ethereum, which are currently resistance of the price of Ethereum, and they will continue to be resistance, I am expecting, until Bitcoin goes into a new bull market. As well as the market cipher B, we can see, again, don't pay too much to this, too much attention to these indicators. This is just explanation for your future, I would say, review when you have passed through all these indicators which we will develop in our channel. Now, what we can see here is that the MACD is currently quite deep, comparing to the 2022 is actually very similar level, which was the bottom of the 2022 bear market, in this case for Ethereum. As well, we are actually quite close to that particular level, where we have a sign of breakage of the signal line going over the baseline, which is the start of the next bull market for Ethereum, as well as stock RSI, which is quite oversold on 10 points, and it's considered oversold below 30, as well as RSI, which currently considered on a monthly level is quite low. As we can see, it's quite low, same as the bear market in 2022 and the bear market in 2018, 2019. where we actually had the previous two bottoms of the bear market. Now, again, this is, as you can see, determination that we're close to the bottom of this bear market, but I wouldn't go and say we're definitely achieved the bottom of it until we have seen the bottom of the Bitcoin chart itself. So we're going to definitely continue to follow this particular, I would say, category and see where it leads. Next, we're going to talk about the tokenomics. Now we're going to go into detail about the tokenomics of this project, where first of all, we need to understand how many tokens are there in practical supply and how many of them are put in circulation. Just for, I would say, a review of what we have passed so far. So we have explained the roadmap. We have explained the market maturity, which is one of the oldest blockchains. Active roadmap, we have explained so far what type of, I would say, upgrades there are for this blockchain and what is expected in the future. Additionally, as we've seen, we've explained in detail the application. Technical analysis, we've explained what is currently the level of bear or bull for this project, obviously in comparison to where Bitcoin is currently at the moment. Fundamental analysis, we have mentioned the partnerships. As well, in this case, we're going to mention a bit more about the DATs and ETFs in this segment that we're going through in a moment. Exchanges where it's available, this is something we can answer immediately, so we cross it off the list. Now, you can find this on CoinGecko. Below over here, you can find all the exchanges that this project can be bought and sold on. Obviously, Ethereum is the second largest, so it means that all the major exchanges are actually supporting it, which is expected. And obviously, I don't think this is going to change anytime in the future. Now, this is something that obviously is very easy to find for any other project that you want to do so in the future. Then, connection to criminal or civil court cases, we can say immediately there are none, but this is something you definitely need to check. The easiest way to do so is just open Google and write Ethereum connection to criminal or civil court cases, and it will lead you to any information if there are any. Why is this important? Because usually these kind of projects, which are connected to any kind of criminal or civil court cases, might have, I would say, negative FUD effect of fear, uncertainty, and doubt, where people kind of avoid investing in it. And I would advise you to do so if you don't know the details of the court case itself. As an example, I would say XRP, which we have invested heavily even when it was under a criminal court investigation, because we knew that this type of project did not do anything wrong. These have, I would say, rewarded us greatly with a, I would say, very nice 10x in the last bull market. But again, I would not advise you to do so. None of this is financial advice if you do not know the details of the court case itself. And we're going to the tokenomics, where we already explained the type of blockchain. Now we're going to explain the supply. This is where we are currently. Now, first thing we need to understand about Ethereum is that all the supply of Ethereum is already in circulation. Roughly 120,686,000 Ethereums are currently in circulation, and we can see that this is actually the total supply. Now, why there is no max supply? Because there is constant inflation. We saw that the inflation of this project is 2.8%, but in this particular case, there is a special mechanism, which is the burn mechanism, which is burning a part of every transaction. So a part of the fee that you pay for every transaction on the Ethereum blockchain is burned. And we can see that currently, on a yearly basis, the Ethereum blockchain, through this mechanism, is burning around 551,000 Ethereums, and in the same time, it's producing 869,000 Ethereums, which means on a yearly basis, the only inflation that this blockchain really has is only 0.26%, which means it has around 3 times better inflation than Bitcoin, which has around 0.7, 0.8%. Why is this so important? Because even if the reward is 2.7%, which you get as a staking, the people that actually do any kind of transactions on Ethereum and the blockchain itself is burning most of the fees that are coming as payment for you to be able to do the transaction. So it means that it vastly lowers the inflation of these projects to just 0.26%. And again, if there is a lot of transactions, as we've seen in the past, when there is a lot of congestion on the blockchain itself, the inflation can go the other way around, where we had, believe it or not, in April 2024, deflation of 0.38%, which means that on a yearly basis, the amount of Ethereums in circulation is getting lower than what is currently here. And obviously, in the future, when this blockchain starts being used more and more, as we've seen, usually in the bull market, and now we're going to see a lot more with the real-world asset tokenization, we're expecting exactly this to happen, which means a lot bigger burn than issuance, which is fixed. And in this case, obviously, it will result in deflation, which means it will make the coins that you hold of this blockchain worth more. They will rise in value. Now, circulation supply, obviously, it's always to check on several sources. The one that we have checked so far is the CoinGecko, as we can see over here. We also checked on their own. This is the ultrasound.money webpage, where you can actually see the current supply in circulation live, as well as we have checked the same in the tokenterminal.com webpage, where again 120.7 million of Ethereums are currently in circulation. Now, in other, I would say, in other blockchains, there will be a vesting schedule as well, which means we will be able to see on tokenomist.ai, depending on the project, what kind of vesting schedule there is for this type of project. Obviously, over here, we can see the only vesting schedule that there is actually the inflation of the blockchain itself, since the vesting schedule is already finished. This is one of the oldest blockchains. But for other projects, we will see a situation where there is still tokens that are being rewarded to early adopters, to venture capitalists that invested, to the team, etc., etc. In this case, there is no such a thing, which means this is a positive about the project itself. Now we're going to go again a little bit back to the fundamental analysis, which, as we've said, is the analysis of who is buying this type of cryptocurrency. Now, the first thing we're going to see is the ETFs, the exchange traded funds. These are the Ethereums that are held by institutions. Obviously, we can see very large names like BlackRock, Fidelity, VanEck, which are actually quite big, Grayscale, Franklin Templeton, Invesco. These are all quite big names, especially the first largest company in the world, BlackRock, the third largest asset under management fund, Fidelity, the fifth largest, Franklin Templeton, and the seventh largest, Invesco, which together are holding a very large amount of 16,870,000 Ethereums, which is extremely large amount of practically Ethereums. Now, obviously, this is considered in dollars, so it's 16,870,000,000 worth of Ethereum is accumulated currently by these large institutions, which means that the institutions themselves, even if it's a bear market, are quite interested in accumulating this particular cryptocurrency, which shows you the future of these particular cryptocurrencies. Where you can find them, there is plenty of these trackers. The one that I'm using for Ethereum is farside.co.uk for Ethereum, where you can actually see the amount of every particular company bought and sold on a daily basis. Also, what we need to check is the DATs. DATs are digital asset treasuries, unlike the Ethereum, the exchange traded funds, where all these funds are held by one company and they're practically held in custody for other consumers. We have a situation where DATs are held directly. These are companies that have decided that part of their portfolio will be held in a particular altcoin. Now, in this case, for Ethereum, as you can see, there is plenty, and we can see a very large amount of Ethereum that are held by these companies. As you can see, currently there are 29 companies that are holding their own, I would say, special digital assets treasuries, where the biggest one is, as we've mentioned, that's Bitmine, which holds 5,180,000 Ethereums, or 4.3% of the total amount of Ethereum in existence. And as you can see, these are the amounts that Bitmine was buying so far on a weekly basis. That's why when we mentioned in the fundamental analysis that they will be slowing down, I think is understandable, since they came to 4%. And I remember that the creator of Bitmine the CEO of Bitmain mentioned that this is the target that they want to achieve, 4% of the whole amount of Ethereum to be in their portfolio. Now we can see they were buying from 70 to 100,000 Ethereums per week, which is a very large amount. That's about that. So obviously there is quite a big, I would say, appetite for Ethereum when it comes from the institutions themselves. Next category that we need to check, which is part of the tokenomics, is the real-world asset tokenization. Over here, we can see how many of the real-world asset tokenization capital is tokenized on Ethereum. Now, why is this so important? Tokenization of real-world capital makes it digital, which means makes it a lot more transferable, and it can be transferred 24/7. Additionally, on top of that, it can transfer anywhere in the world. Now, as we can see, Ethereum is the largest layer 1 that is used currently for tokenization. And one of my previous mentions that Bitcoin is not a layer 1, exactly you can see in this part. Why? Because only on layer 1s, which are smart contract compatible, you can actually do tokenization, where through this smart contract practically digitization, you can actually turn these real world assets into digital ones. As we can see currently, there is a extremely large amount of $167 billion of stable coins, which is actually tokenized version of cash. Then 7.5 billion, as we've seen, that's the US Treasury debt, short-term debt. Commodities, 4.9 billion, which are actually resources like gold, etc. Asset-backed credit, 1.4 billion. Diversified credit, 500 million. Stocks, 463 million. Active strategies, etc., etc. We can see that the total amount of tokenized assets outside of the stable coins is $15.66 billion. Compared to the rest of the layer 1s that are used for tokenization, we can see that Ethereum is currently the largest one that exists currently. As we can see, so just to see by just a moment. Here we go. So as we can see, currently Ethereum leads by at least 3 times above Binance and a lot more about the rest of the layer 1s, which means Ethereum is the largest platform for tokenization. Now, when we're talking about speed, on this site, chainspect.app, you can see the fastest blockchains that are currently in existence. Obviously, Ethereum is none of the fastest, but is one of the, I would say, strongest. So it is on the 14th place by fastest blockchains of processing of their transactions. But as we have seen, in this case, Ethereum is practically using its layer 2s for the speed of transactions. As we can see, Polygon, in this case, Base, then Arbitrum are layer 2s on Ethereum, which are actually processing a lot faster transactions, which are actually making the whole Ethereum system quite fast. Now, obviously, Ethereum has found a solution how to go around it. Another thing which is very important is DeFiLlama.com, which is a portal that shows you how much decentralized finances are there on a certain blockchain, where we can see the total amount of money locked into the ecosystem of this particular blockchain. Currently, as of 8th of May, there is $45 billion worth of capital locked on the Ethereum ecosystem in its own applications. As we can see over here, as per application, how many of these billions are locked. Obviously, there is different types of applications, side chains, etc., which are actually using the Ethereum. Now, this shows you that Ethereum is one of obviously is the largest ecosystem when we come to DeFi, and it's actually used. This is a very important part. When you see that there is a $45 billion worth of capital moving around through this application, it shows you that Ethereum is really used. And we can see that the total amount of total value locked in the whole DeFi sector of crypto is 84. Then you realize that half of this, and even more than half of this capital, is actually on Ethereum. That's how important Ethereum is in the crypto industry. And if we go forward, these are some basic, I would say, numbers and characteristics about the blockchain itself that we have to mention on Token Terminal, where we can see that there are a lot of active users on a monthly level that are using it. Obviously, this is the best, I would say, one of the most used layer ones. There is 9.5 million active users on a monthly base on this blockchain. All these decentralized application, layer 2s, everything that is currently on this blockchain, there is 9.5 million active users. And this 9.4 million users are actually having very large amount of transactions. As you can see, we just reached a record all-time high of monthly transactions of 21.8 million transactions on a monthly level, as we have seen, which is the highest that Ethereum has ever reached, which means, again, there is a lot of use case when we're talking about this particular layer one. Token holders, these are the total amount of, I would say, active addresses, I would say unique active addresses that are currently holding Ethereum. There are 310 million, again, new all-time high, 310 million active unique addresses that are holding Ethereum. All-time highs, which is quite good. On top of that, we can see, is this blockchain in general profitable? It's not the same as a company, trust me, because at the end of the day, some blockchains do not make a lot of fees, but at the end of the day, they are, as you can see, quite used and quite large. We can see that currently in the 3 years, in the last 3 years, Ethereum has accumulated $4.6 billion worth of fees. Now, don't forget that a big part of these fees is actually burned. We're going to, as we've mentioned before, in the sound money. Now, as we've seen, a lot of these fees are burned. That's how we are actually lowering the inflation of the Ethereum, I would say, on a yearly. And as you can see, on a, in this case, weekly base, there is around 6 to 10 million on a good week, and sometimes 1 to 2 million, depends on a week, as we can see, of fees that are generated on the Ethereum blockchain. On top of that, we can see that not all of that is obviously revenue. This is after the burn mechanism, as we can see in the rewards. There is a lot smaller amount of this money that is actually revenue for the blockchain itself, which actually explains the burning mechanism that we have mentioned before. Also, when we're talking about tokenomics, we also need to mention the developers. Now, as you can see on this cryptometeus.com, we can check the active developers of any blockchain that has actually sent this data to the decentralized platform. As we can see, on a weekly basis, Ethereum is first in the core development of the blockchain, which means that has most contributes by developers for developing its own core blockchain, Ethereum, as well as ecosystem. Obviously, in this case, Ethereum will always be on first place since it's the largest by ecosystem and obviously by number of active developers, etc., etc. And as well, on a yearly level, Ethereum is the one that has the most contributes to his own blockchain. Also, for us to confirm this, we can see on Token Terminal as well that there is a lot of active contributions, code commits, for this blockchain. This is very important because this way we can see that the developers are actually doing something with the blockchain. They are actually developing and working the blockchain itself, as well as the contracts deployed, which are the active contracts. These are the smart contracts that are deployed. Not always there is an application behind it or a layer 2 or something, but these are the actual contracts that are deployed, which Ethereum processes. And we can see there is plenty of activity, which means that the blockchain is alive, is being used. And also very important is the number of developers. Now, the bigger amount of developers that are working on a blockchain, the better, because don't forget that developers in 99.9% of the case are paid in the coins or tokens of the blockchain itself. And since all the developers are paid in coins from the blockchain itself, obviously they will do their best to actually make the blockchain work. Now, in this case, we can see there is a lower amount of developers on a practically monthly level, which is explained by the bear market itself. But in general, overall, we can see that there is constantly a larger amount of developers that are working on Ethereum. They have 3.2 thousand developers working on the main core development of Ethereum, of which 4,500, but again, don't forget that over here there is a second amount, which is the amount that is actually active on the, let me explain, on the Ethereum virtual machine. As we can see, there are two separate packs, I would say, of developers that are working on Ethereum. There are 3,183 which are working on Ethereum itself, and then additional 4,185 that are working on the Ethereum virtual machine, which is something we're going to explain in the future. I don't want to bother you right now with it. But the idea is that of all those developers, 4,596 are well established, which means they're working on the project quite long. And in this case, this is very good. The larger amount of established developers, it means that they are long-term here. It means that they will stick with the project. As well over here, unfortunately, for some reason, we have only 180, which obviously is not the case, as we've seen on the previous developer report. But in any case, it's always better to check different sources. And also, at the end, we have this special web page, which we're using, and is a blockchain project called Arkham, which we're also invested in, to be fair, intel.arkham.com, where you can actually check who owns what. If you just write Ethereum, you're going to end up with three special wallets that are currently holding Ethereum. The first one is the Ethereum Foundation, which holds a total amount of 82,000 Ethereum. When you compare this to 120 million, it does own a very small portion. This is very important because this is part of the decentralization. The more certain groups, individuals, companies, or parts of the project itself hold coins, the more centralized it is, the more there is a risk that some of these, I would say, centralized entities will dump on you a certain amount of coins. Now, this is a very small amount. Ethereum Foundation is, as we've said, the foundation that is leading the development of Ethereum blockchain. Now, in this case, this is a very small amount, so there is nothing to worry about. When we go to the second part, which is the Vitalik Buterin, is the founder and the main, I would say, developer on Ethereum. He holds 224,000 Ethereums. Again, it's a very small amount when you compare it to the $120 million Ethereums in circulation right now. Again, it is a small amount, but don't forget that any movement in his portfolio regarding this amount of Ethereums right away makes, I would say, tsunami in the investing community. So keep that in mind when you are actually following these portfolios. This is something you might want to check from time to time. And ENS, the Ethereum name service, also has a small amount of Ethereum, which is, I would say, not very important, but I just wanted to mention 4,700 Ethereums. Again, Ethereum name service is part of the Ethereum ecosystem. We're going to work on it in a separate video in the future. And obviously, at the end, for decentralization, I always want to go through CoinMarketCap, which sometimes have its own chart where you can see the total amount of wallets, the biggest amount of in wallets, sorry. But unfortunately for Ethereum, for some reason, it doesn't have. I don't understand why. But for this reason, obviously, we have a special web page called coincarp.com, where there is a rich list. And you can see, in this case, for Ethereum, you can see how many of the top 100 holders hold how many coins in total. Now, in this case, it's 72.9, but I think there is some kind of a mistake since there is literally no wallet that holds 51.4% of the total amount of Ethereums. For some reason, I think this is some kind of a mistake. But if we exclude this 51.4, we can see that the rest of the largest wallets in existence of Ethereum, because don't forget, these type of blockchains are transparent and they can be very easily tracked, are very small, 2.2, 1.6, 1.5 of the total amount of Ethereum in circulation, which is very small amount. And in this case, if somebody of these blockchains, of these wallets decides to dump this whole amount, it's not going to make a big, I would say, change on the price of Ethereum. This is the, I would say, fear we have when we are actually exploring this particular type of question about the blockchain itself. Now, this is practically the last question that we have answered about the blockchain, and I would just want to recap from tokenomics onwards to see if we have answered everything. As we have mentioned, ETF, ETPs we have mentioned, DATs we have mentioned, how many of the supply is already in the market, how many of this is held by team and institutions we already explained, real-world asset tokenization, active developers, how active the developers, we actually explained as well, statistics of use of the blockchain as well, and at the end, obviously checking the largest wallets. Now, this is the total amount of information you need to have to be able to fully understand a project for a beginner. I know it's a lot, but since you have already seen more or less all the questions you need to ask yourself before investing in a certain project, you can actually copy this for yourself and use it as a basic analysis to understand a certain crypto project better. In the future, expect that we are going to go through these 6 different questions, 6 groups of questions for a lot of different projects. On the Macedonian channel, we have already analyzed 121 projects, and for around 20 of them, we have already done a second video with additional update to see where this project is going in the future. I would advise you to follow our YouTube channel, Crypto Economics, which you can find very easily on YouTube, where you can find all these videos and future, obviously, education inside the playlist that we are currently building. Thank you for everybody that have been part of our journey so far. I know it's just the beginning, but trust me, there is plenty to do together, and I hope you will be with us on the journey ahead. We'll see each other on the next educational video. Have a good day from warm Malta.